The Nasdaq 100 gapped down on Sunday and was an underperformer on Monday after oil stole the headlines. This was after OPEC Plus announced a surprise production cut of 1.16 million barrels per day on Sunday. The Nasdaq 100 doesn't have any oil representation, being a tech-heavy index, so it didn't benefit. Additionally, the worry here is that the Fed will have a more difficult job of keeping inflation down, especially if oil prices remain high. Oil did open sharply higher when the markets opened on Sunday night, as shown here. More rate hikes could be required if inflation moves higher again, which weighed on tech stocks. We also had Tesla Q1 delivery numbers come out at 422,875, which fell short of the upper range of analyst estimates. Estimates range from 410,000 to 451,000 deliveries expected. As a result, analysts began predicting more price cuts may be coming from Tesla following the delivery number release. That hurt the stock and the Nasdaq 100. Tuesday saw the Nasdaq 100 fill the gap down as price hit a high of 13,226 before coming off. US job openings came out on Tuesday, which saw job openings dropping to 9.93 million, the lowest since May 21. Whilst the Fed may be pleased to see the labor market cooling down, the worry will be that the rate hikes are beginning to slow down the economy, and not in a so-called soft landing way, but in a hard landing way where we see weakness prolonged. It's likely we move away from inflation talk in the next 6 months, and the focus becomes on the weakening economic data and the inevitable recession that follows. Here is a chart to prove that point, which was shared on social media. The ISM manufacturing PMI is in decline, which came in at 46.3 on Monday, below analyst estimates. The ISM manufacturing decline has historically led earnings growth by about a year. The PMI index in this chart has been shifted forward by 12 months and plotted against the S&P 500 trailing 12-month EPS growth. Based on this relationship, Monday's PMI reading of 46.3 implies an earnings contraction of about 8% over the next 12 months. This is what is likely to be the focus in the coming months. Back to the Nasdaq 100, and the inverse hammer candlestick on Tuesday saw price follow through to the downside on Wednesday, with the key support level of 12,940 retested. This is the level that price broke above last Thursday, and Wednesday we had the retest. The move lower on Wednesday was driven by a weaker than expected private payrolls report. That followed Tuesday's job openings report that suggested the Fed's effort to cool down the labor market might finally be having an effect. Thursday saw price rebound, and more importantly will mean price closes the week above the 12,940 level. That should lead to some further upside early next week, with upside levels to watch being 13,226 being the high of the week, followed by 13,320. You can see a bullish flag pattern forming here on the daily, so that also suggests price will likely push higher, at least up to those key levels. Despite the market being closed tomorrow, there is the non-farm payrolls report out in the US, but the reaction to that will be delayed as US stock markets don't reopen until Monday. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.